Hey everybody, Rob Maurer here. This should be a pretty quick episode to wrap up the week. Not a whole lot of news, but we do have some news from New York on electric vehicle infrastructure, a new price target from Baird, and some updates on yesterday's episode. Tesla stock on the day today just so happened to close again right at $1,500 per share. Well, 84 cents above $1,500 per share, but only up 0.01% on the day compared to the NASDAQ, up 0.3%. So the second day in a row really that we've closed on $1,500 per share, which I'm sure has nothing to do with the options market. Saying that facetiously, just to be clear. All right, we'll start off with New York. Yesterday, New York Governor Cuomo announced a new infrastructure investment project for electric vehicles called the EV Make Ready program, intended to increase investment in EV charging infrastructure in New York State. In the release from the governor's office, they say, quote, "The EV Make Ready program will be funded by investor-owned utilities in New York State and creates a cost-sharing program that incentivizes utilities and charging station developers to site electric vehicle charging infrastructure in places that will provide a maximal benefit to consumers. The Public Service Commission order caps the total budget at $701 million and will run through 2025, with $206 million allocated toward equitable access and benefits for lower socioeconomic and disadvantaged communities, which will also be eligible for a higher incentive supporting up to 100% of the cost to make a site ready for EV charging." End quote. New York State believes this funding will support the development of more than 50,000 level 2 charging plugs, which they describe as being, quote, "capable of charging a vehicle at least 2 times faster than a standard wall outlet," end quote, and then also 1,500 public DC fast charging stations in New York as well. Now that fast charging station number may seem small when we're talking 1,500 in comparison to the more than 50,000 plugs that they plan to have at level 2, but that's actually quite a lot of stations, and they do specify stations here rather than saying 1,500 DC charging plugs. I would guess these would be smaller stations, fewer plugs than a Tesla supercharger station, and probably not quite the charge rate. But for comparison, the supercharger network is just under 2,000 stations worldwide, so 1,500 in New York State is significant. Tesla has about 50 supercharging stations in New York State at the moment. Even if New York State here is referring to just individual DC charging plugs, Tesla generally has 8 to 10 stalls at each supercharger location, so probably 400 to 500 or so in New York. So this would possibly represent, at minimum, about 3 times the current infrastructure Tesla has in New York, though of course the goal is to build this out over a number of years through 2025. For some further context in terms of how this infrastructure would compare to gas station locations, for example, the last data I was able to find on this was from 2012, and in 2012, New York State had 6,000 gas station locations. So while the wording on this is a little bit murky because they say that the action is going to provide funding for the infrastructure required to support these charging stations, leaving it, to me at least, a little bit unclear about how far through the project that funding gets you. But either way here, $700 million being pushed towards EV infrastructure build-out, which I think is pretty exciting. Next today we have an updated price target from analyst Ben Kallo of Baird, who has increased his price target on the stock to $984, up from $700 previously. Kallo for a long time had been bullish on the stock, but more recently has been neutral, and his neutral rating remains with this update. Barron's reported on this price target change, saying that Kallo wrote that the risk-reward temporarily skews negative for Tesla right now, adding, quote, "He believes Tesla will produce a second quarter profit, something no one expected weeks ago, but added if the company doesn't, it will be a negative catalyst for the stock, given the intense discussion about Tesla's inclusion in the S&P 500 index lately," end quote. I think I would agree with that assessment, though I also expect a profit, so it's not a situation that I expect to play out, but it's possible. I'll go through my expectations for earnings either on Monday or Tuesday next week, and with that we will look at the FactSet consensus analyst estimate, but I do think it's likely that it still shows a loss expected for Tesla in this quarter, but clearly expectations have risen, and I think it's likely that these analyst updates are lagging behind. Some models won't even have been updated since the Q2 delivery report came out, so when we look at that, it's worth keeping in mind, as Kallo says here, that there probably is an expectation for profit, regardless of how the consensus comes in. Kallo says, quote, "We do think the stock is pricing in inclusion at current levels as funds position ahead of rebalancing," end quote. As we talked about in the S&P 500 inclusion exploration episode, I would agree with the general premise that there probably has been some buying ahead of time, but I don't think all the shares that eventually will need to be bought have been bought at this point. Yesterday we had talked about analyst Dan Levy of Credit Suisse mentioning that there's been a significant acceleration of the number of users holding Tesla stock in Robinhood brokerage accounts. We compared that to Walmart to show that Tesla was outsized, but not maybe as much as it may have seemed at first. Well, today we can extend that logic even further because yesterday a couple of astute YouTube commenters pointed out that over the course of this year, Robinhood has been rolling out the ability to purchase fractional shares. That has been a staggered rollout that they had announced on December 12th. But as more and more people get access to that fractional share capability, of course there are going to be more users adding Tesla stock, and that impact for a stock that is $1,500 per share versus a stock like Walmart at $130 per share is going to be much more significant, especially when we're just looking at the stat of number of users holding that particular stock. So while there may be a bit of EV euphoria in the market, as Credit Suisse's Dan Levy said in the note, I don't think the number of users holding Tesla stock in Robinhood is a good proxy for that conclusion. Another quick update here to yesterday's episode. We talked about Tesla updating their pricing on solar. Well, it turns out they have actually updated their referral program for solar as well. I believe in the past it was $250 for the referral and $250 for the referee. Well, Tesla has now shifted that so that anyone using a referral link earns a $100 reward after their solar system is activated, or their solar roof, and that once they do that, the person referring will earn a $400 award. They also say, quote, additionally, you will earn one Powerwall for 10 or more solar referrals, limited to one award, end quote. Sadly, I don't have a referral code. I don't drive really at all, probably a mile a week, and I live in an apartment, so no solar for me. But my friend Matt Joyce does have a referral code if anyone wants to use that, and Matt has offered to give me the Powerwall if we do get up to 10 referrals. That would then go to my parents, and we definitely would make some videos with it. Link for that will be in the show notes if you want it. And then the last thing for today, I did receive an email from Tesla today doing a little bit of marketing for the Model Y. The title of the email was Explore Model Y, Updated Pricing, All Glass Roof, and More, and read, quote, Model Y is now on display in your local showroom and available to test drive. With up to 316 miles of range, plenty of storage, and versatile seating, the Model Y is the ultimate combination of performance and utility. Explore updated pricing on all trims and experience an immersive view on your test drive with Model Y's full-length glass roof. Schedule a test drive with your Model Y or experience our award-winning Model S, Model X, or Model 3 during your visit with a self-guided appointment, end quote. I'm not sure if Tesla has, as of yet, been offering much test driving on the Model Y, and obviously things are a bit weird with the coronavirus situation. And obviously the situation is a bit different for the Model Y than the Model 3, but at least for the Model 3, beginning to offer test driving was a pretty significant inflection point if we look back in hindsight. The first Model 3 test drives started to become available back in mid to late July of 2018, so early in Q3, just as we are now, and that Q3 of 2018 was the quarter where Model 3 deliveries really just took off. We went from 1,000 or 1,500 back in Q4 of 2017 up to about 8,200 in Q1, 18,000 in Q2, and then in Q3, that delivery number jumped all the way up to 56,000 for the quarter, and that was the quarter they started offering test drives. If we look at the production numbers for those quarters, the variance isn't as significant. There's not such a massive inflection point. Tesla went from about 10,000 produced in Q1 of 2018 up to about 28,500 in Q2 of 2018, then to 53,000 in Q3 of 2018. So still massive growth there between Q1 of 2018 and Q3 of 2018, but it's a little bit more smooth through Q2. But because Tesla produced more vehicles than they delivered in Q2 2018 by quite a lot, I'm guessing a lot of that production was backloaded towards the end of Q2, meaning Tesla hit that inflection point towards the end, leading to a lot of those vehicles then being delivered in Q3. So again, for many reasons, it's not a straight apples to apples comparison, Model Y to Model 3. There are a lot of things that are different now from 2 years ago, but it is still a very interesting data point, and when we think about this being combined with the updated pricing and the rumors of Tesla expanding out to General Assembly Line 4.5, it certainly is starting to look like things are really gearing up here for Model Y, which would be in line with my expectations. I would be curious to hear in the comments if others have received similar emails on Model Y from Tesla. Alright, last quick thing here for today, another update on yesterday's episode. We talked about the Science Channel's Superfactories program, which toured Tesla's Gigafactory in Nevada. They had stated that Tesla was producing 13 million cells per day, which would have implied a production rate of more than 80 gigawatt hours per year. So I talked about yesterday why we should be skeptical of that number. And today Electrek is reporting that Panasonic has reached out to them to let them know that that number was not accurate. Electrek says, quote, but now Panasonic, who is behind battery cell production at the factory, told Electrek that the information shared by the Science Channel is not accurate. The battery manufacturer didn't want to confirm the actual battery cell production capacity at Tesla Gigafactory Nevada for quote-unquote competitive reasons, end quote. So I guess we were right to be skeptical, and I guess we can just chalk it up to a mistake by the Science Channel. But that will really do it for today and for the week as we head into earnings week next week. I hope everyone has an awesome weekend. Make sure you're subscribed here and signed up for notifications, following me on Twitter at Tesla Podcast, and I'll see you, if not sooner, Monday, July 20th for the next episode of Tesla Daily. Thank you.